will come back to help her dad. Today we're diving into the 5 best Vanguard ETFs, or exchange-traded funds, also known as index funds, that you can use in your retirement portfolio. Investing for retirement really calls for a diversified approach, and you definitely want to keep your costs as low as possible, so you can keep more of your returns. Vanguard ETFs really shine here, because they give you fantastic options for building a solid retirement portfolio without breaking the bank in fees. This guide is going to detail 5 of the very best Vanguard ETFs that you can use to help achieve your long-term financial goals. First ETF we're looking at is the Vanguard Total Stock Market ETF, ticker symbol VTI. This ETF boasts a very low expense ratio, often around 0.03%, making it extremely cost-effective. Its primary investment focus is tracking the entire U.S. stock market, providing broad diversification across a wide range of companies. The benefits of VTI include this extensive diversification, the ability to capture the overall growth of the U.S. market, and its suitability as a core holding in your retirement portfolio. However, it's important to consider that VTI is primarily focused on the U.S. market, so it may not provide exposure to international investments. Next up is the Vanguard Total International Stock ETF, ticker symbol VXUS. This fund boasts a low expense ratio, for example, around 0.07%. Its primary investment focus is tracking international stocks, encompassing both developed and emerging markets. The key benefit here is diversification. It allows you to extend your portfolio beyond the borders of the United States, giving you exposure to global economic growth. However, it's important to be aware of the considerations involved, specifically the potential for currency risk and the inherent volatility often associated with international markets. Our third pick is the Vanguard Total Bond Market ETF, ticker symbol BND. This ETF boasts a very low expense ratio, often around 0.03%, making it incredibly cost-effective. Its primary investment focus is tracking the broad U.S. investment-grade bond market. The BND ETF offers a number of benefits, most notably providing stability and a consistent stream of income to your portfolio. It also acts as a hedge against potential stock market downturns, offering a safety net during volatile times. However, there are considerations to keep in mind. Bond ETFs generally have a lower return potential compared to stock ETFs. Additionally, they can be sensitive to changes in interest rates, which can impact their value. Let's move on to the fourth ETF on our list, the Vanguard S&P 500 ETF, ticker symbol VO. This fund boasts an extremely low expense ratio, often around 0.03%, making it incredibly cost-effective. VO's primary investment focus is tracking the S&P 500 index, giving you exposure to the 500 largest publicly traded companies in the United States. The benefits of investing in VO include broad exposure to the U.S. large-cap market and historically strong returns that mirror the overall performance of the S&P 500. However, it's important to consider that VO is less diversified than a total market fund like VTI, as it concentrates solely on large-cap stocks, potentially missing out on growth opportunities in mid- and small-cap companies. Our number 5 pick, we have the Vanguard Total World Stock ETF, ticker symbol VT. This ETF boasts a remarkably low expense ratio, for example, just 0.07%. Its primary investment focus is tracking the performance of the entire global stock market, encompassing both U.S. and international equities. One of the key benefits of VT is that it simplifies your diversification efforts into a single exchange-traded fund, eliminating the need to manually balance separate U.S. and international stock ETFs like VTI and VXUS. However, keep in mind that you may still need to rebalance occasionally to maintain your desired asset allocation across your entire portfolio. Thanks for watching. See you next time on Helper Dad. So, in conclusion, these 5 Vanguard ETFs really do offer a strong foundation for building a well-diversified and low-cost retirement portfolio. Remember to carefully consider your personal risk tolerance and your investment time horizon when you're deciding on the appropriate asset allocation for your portfolio. And finally, it's always a good idea to consult with a qualified financial advisor who can provide personalized guidance tailored to your specific financial situation and goals. Don't wait. Start investing today and secure your financial future.